Well, we're going to get started then. Feel free to chat along the way and ask some questions. What we're going to do today is just take a few minutes. We're going to make good use of your time. And we're going to show you, and because you're taking a second look at us primarily, looking at our company, looking at the results that we do, how our account or our company account went from $40,000 to $91,000 over the past year and a half or so. So we want to show you the results. Show you how to get started with us. And because you came and looking at us again for the second time, there's an offer for you. We want to help you get started to use our algorithms because you can't make the returns unless you're using the algorithms. And so a lot of times people won't use us because they don't understand or know that the results are real or the cost is prohibiting from doing so. So we have answers for both of those questions today. So Richard Metzger is with us. He's our developer and the owner of the company. I'm Brent, and I'm in sales and marketing. And we're so glad you took the time to be here. We're going to get right to it, get straight to the results. So Richard, go ahead and we'll get started.
Great. Thanks again, Brent, for the introduction. And thanks again for everybody that's on the webinar right now. As Brent pointed out, I'm the owner developer. I've been running the company now. I founded it in August of 2013, and we've been running pretty strong ever since. I am an engineer, and that's kind of my background. But in this webinar, really what we wanted to do was just show the results of a company account that I began trading back in February of 2017. And it has traded live since then using just the swing trader. And so we're just going to review the results of that. As Brent pointed out, this is really meant for people that have looked into us before, but maybe decided not to and have decided to come back. I know that on the webinar right now, I think we probably have some of our existing customers. That's okay. We always welcome them to join in on these as well. But yeah, this is a webinar put together mainly for people that are kind of checking us out. The more that we think about it, the more we realize that the reason why people might not do this, there's a few different reasons. It could be risk related. It could be that they don't believe the results. They could believe that they could do better. They might just not understand what we do. And so really this webinar is trying to tackle are the results real, or is this really something that someone has seen using the algorithms? And so that's what I'm excited to show. But before we do that, as you guys know, we always have to do our disclaimer. The disclaimer, I'm just going to have it here for a second as I talk about it. But in essence, what we do is we're a futures trading algorithmic developer. And so I develop third-party trading systems that trade the futures market. There's a handful that we offer on the website and that we trade with our live accounts and that people are trading right now. Just keep in mind, it's not for everyone. It's totally okay if you look at this and you say, there's something about it I'm just uncomfortable with. It's totally fine. We try not to do a hard sales tactic on these algorithms. What we really try to do is present the data. Also, just remember, past performance is not indicative of future performance. Trading futures involves substantial risk of loss. It's not appropriate for everyone. And the last comment I'll make is I'm not a CTA, so I'm not a commodity trading advisor. What that means is I don't directly control your account. People trade the algorithms under what's called a letter of direction, and so they are traded on autopilot, but I don't have a power of attorney on the account. I don't touch your money. Your money's with actual brokers. But so with all that out of the way, let's just get into it. So really just about 15 minutes is all that we're asking for. I think the results will probably appear unbelievable to a lot of you. And so really what I want to do is just show you the data, show you the results that we've had. And then also to give you a special deal at the end. So we like to do it on the webinar because we realize you're taking some time to do this. And we want to reward that. So we do appreciate you listening to the pitch, if we want to call it that. But first about me. So the company founded in August 2013. The LLC was created in February of 2018, or I'm sorry, 2014. So we've been around a while, like I said. The reason why I got into it is I was your typical day trader type that was never successful. My emotions always got in the way of my trades. So I would move stops, and I just finally realized, there's a better way to do this. And so that's when I got started with TradeStation, started writing my own code. Again, I'm an engineer, and so I've never been intimidated by programming. That's really what I did as a career as a logic design engineer. We basically write programs that describe these circuits, and then they get synthesized, and that's probably a whole nother webinar. But it's the perils of emotional-based trading that I knew there was a better way. And so that's when I did my first algorithm. I basically wrote an algorithm that went long it was actually the NASDAQ when you had a big move, like a big gap up. And actually the very first algorithm I did is it went short because I thought, oh, gap up, it's going to fill. So I went short. And what I realized is that, that just doesn't work. When you write the code and you analyze it, you back test it, that algorithm as it stands does not work well. So then I kind of flipped the parameters. I said, well, what happens if you go long then? And that's really when the aha moment happened, because that's when I wrote my first algorithm that actually worked. And that algorithm is actually still traded right now. It's called the breakout. It's one of the day trade algorithms, and it's still traded in our NQ legacy package as well. But what it does is it goes long those gaps. And so that's just an example, because that's a hard trade to make. If you're a trader, you know that it's a lot harder to buy a market that gapped up a couple hundred points than it is to short that thinking that it's going to fill the gap. But in that case, going long was the right trade. So that's kind of how it got started. But enough of that. Let's just jump right in here. I know this might be a little bit hard to see. So let me see if I can maybe zoom in a little bit on it. I'm not sure I'll be able to, but let's try. Give me 1 second here. So I'll be able to zoom in on that. But basically what this account is showing is that in February 2017, so this is the February statement from Gain Capital, it started with 40,000. I tried to highlight it there, and maybe you can barely see that, but it says 40,000 there. That's the initial opening account balance. And again, this was in February of 2017. And it began trading, and it was trading the swing trader algorithm. And the swing trader is one that we offer on the website. It was not compounded. Okay, so what that means is it traded the same number of contracts the entire time. In other words, with 40,000 on the swing trader, you could actually trade about 4 contracts or 4 units. On the website, we show that as 1 unit per 20K, but the reality is you could actually do about 1 per 10K, because really only about 7K is used per contract. So the extra is really just a buffer. But in this case, it only traded the swing trader. I didn't touch it. I didn't take money out. I didn't put money in, and I didn't compound it. So in other words, when the account hit 50K, I did not increase the number of contracts to 5. I didn't place a single discretionary trade on that account. So I never logged in and said, we're going to get early. I just let the algorithm run. So this is a true case study of what happens in a live account when the algorithm is running. And so the next slide that I show you should be the one that shows the results. All right, so this is the results after doing that trade for that long. And if we take a look here, so as of January 2019, the net liquidating value of the account was $91,506. The total profit was $51,506. Our equivalent fee on that would have been about $5,500. So the total profit on it would have been about $46,006. That's a gain of about 115% after you take out the fee that my company would have charged at the time for that. I wish I could zoom in a little bit on that, but basically what this is showing though is that as of the end of January 2017, the net liquidating value in the account was $90,506. So if anyone really wants to see that in more detail, just shoot us an email, and what we'll be able to do is I can actually send you the statement. So again, we have no problem sharing our statements because there's nothing for us to hide from. In fact, it's a lot of people tell me it's weird that we don't share it more often. Some people make the argument that you really can't as a third-party developer. I've been told that you can, though, that it's better to show people more data as long as we have the right disclaimers. So again, the past performance it's not indicative of future performance, but what it does show is that an algorithm only trading the swing trader really was able to generate that kind of capital. So in other words, in about 2 years, it had a gain of about 110%. So that's pretty remarkable in my opinion, and most people that have traded for a while, would agree. So what I want to do now is I'm going to do my best here to try to show you some of the charts. So give me 1 second. Brent, maybe you can fill in and comment more on the results while I try to load up TradeStation so I can show some of the trades.
Yeah, that's good. And we apologize if you can't see that, but that's why you're here. You would want to see the results on that. But Richard trades that algorithm. I've been trading that algorithm for probably 2.5 years at this point. My account's different than Richard's, as many of yours will be too when you trade, because I don't keep the same number of units trading throughout the whole period of time. So I take money out of my account, to pay bills and pay expenses and do those things. And so there are different times where I have different number of units trading. It is okay to do that, but we recommend not to if you don't have to. That way you can get the same result that we see. But I do have a lot of trading experience, traded full-time for a living. And so I know a little bit, maybe more than the average person, to get back in safely and to do those things. So, but we do, most of our clients do leave it running, because it is hard to get out and then time when to get back in again. So that's why it's automated. You kind of need to think of this as a long-term investment. When you do trading like this, people kind of look just from day to day and say, well, it had a loser today, it had a winner tomorrow, and then it kind of gets choppy on you. So you really just need to think of it as a long-term investment. And that's why we're presenting it to you this way, to show you that over a long period of time, from February to now, it's done really, really well. And so it is good to use. It's obviously very profitable in that, but you can, trade different amounts in that if you need to. But we do recommend being able to trade with a certain amount and then starting at that as well. Before Richard gets into this chart here, feel free to type in a question there on chat, and we'll try to answer that here real quick for you.
Yeah, thanks, Brent. So hopefully you guys can see my screen okay. Really what I'm showing here, this is just the TradeStation platform. And what this is showing is on the left, you have the S&P E-minis, and on the right, you have the 10-year note. Now, I don't have the algorithm added to the screen yet, but what I'll show you is that I can enable it simply by clicking on this button. And what's going to happen is all the trades are going to populate. So all the algorithms trades that it placed start getting loaded. And as you see, this chart is very busy. Really what it means though is just that there were a lot of trades placed as the market was going higher throughout this period. This algorithm trades the S&P E-minis and the 10-year note. But if I zoom in a little bit, let's kind of look at the very start of the period that I began this live account. So it was somewhere mid-February 2017. So somewhere in here is where it started. So basically from this point forward, the trades that were placed in the account were all live trades. Now, what this is showing is it's still showing the simulated account, because that's kind of what TradeStation shows. But in the live account that was traded with Fox, it was trading these two algorithms, which was the swing trader and is the swing trader. So what the swing trader is, though, is it trades the S&P E-minis. That's just chart on the left, and this chart on the right, the 10-year note. Now, I'll just really quickly show you kind of what I mean. But as I zoom in, you'll see these dotted lines. The dotted lines just represent trades that were placed. So again, this is a fully automated system, no discretionary trades. And what happens is the market's going higher, the S&P will place these long trades and usually do really well. Well, when the market goes lower, that's where the 10-year note takes over. So this spike in the 10-year is really that period between October and December of this year that we saw the market collapse. And in that process, the 10-year note rallied, and we did really well on the 10-year note trades. What I also want to point out, though, is if I zoom out, you'll see that in this sequence, as the market was going lower, again, that corresponds to the 10-year going higher, notice how we didn't place as many trades. And I think that's what really blows people away, is that the algorithm does a really good job of getting on the sideline. Again, it's all automatic. It's not me turning it on and off. It just automatically knows that, or predicts that it thinks the market is going to go lower. Now, of course, it doesn't get it right all the time, but as that statement that I showed you shows, in the long run, it's done really well. I mean, you just can't really argue with that data. The only thing you can argue with really is that, well, how do we know it'll keep doing that? The answer to that is we don't, and that's the risk that we all take with the algorithm. Everything that I have keeps pointing to that there's no reason for me to think it won't, but I always have to have that disclaimer. So I think that's the main part of what I had. What I want to do now is I'll go back to the slide. I should be able to load that again, and then we'll keep it going. And we do have a little bit of time set aside. So what's going to happen now, though, is Brent is going to talk about the pricing more and sort of the special deal that we offered, and then we'll just kind of go from there. And then I think if we have time, we'll try to answer a few of the chat questions if there are any. So with that, I'll let Brent take it away. Oh, hey, Brent, I think you're on mute.
Okay, great. Sorry.
There we go.
Hey, if you do have a question, feel free to ask it in chat. You know, we've done this very quickly, obviously, to make the best use of your time so you can see our results and do that. But, you know, typically most of you are here as kind of giving us a second look. And we realize that, you know, the things that kind of prohibit people from doing that could be they just don't believe the results are there or the cost is an issue. So we want to try to address those to you because you took the time to come and take a second look at us. And so there, you know, it typically costs the license fee, a one-time license fee to trade up to 60,000. That's typically $5,500. And once you own the rights to that, you're able to trade that in perpetuity. So that means you can trade as little as 15,000 or up to a total of 60,000. It also has the 5% new high watermark maintenance fee on that. And what that means is that when your account makes a new high, we invoice 5% of that as a maintenance fee. For instance, if you started trading, let's just say in March, you know, with 15,000, you close March at 16,000. That means you made a new high, and so you made $1,000 profit. That means we would invoice you 5% of that $1,000 profit, which is $50. And we don't invoice that again until you make a new high in your account, and then we would then invoice 5% of that new profit that you made there. So we hope it's every month, because that means if we're making money, that you're making money, and then we're invoice the maintenance fee to you. So really, we have a lot invested in that. If our algorithm isn't producing, then we obviously don't have a maintenance fee. But if it is, then you're doing very well. So that's why we've done it like that instead of a flat fee to be able to do that. So what we're going to do, because you came back and you want to take a second look at us, this is just for people on the webinar, so it wouldn't be for any of your friends that weren't on here and didn't take the time to come back. So what we want to do now is just say, you know, to trade up to that 60,000, which would be 4 units of the swing trader, that would be $3,900 license purchase on that. That's a one-time fee that allows you to trade the algorithm in perpetuity, and then have no maintenance fee at all. So we're reducing the risk out of your pocket significantly, and then also into the future by not having any type of a maintenance fee on your account. And so I want you to think about that and think about the reduction that is and what it saves you. But I do have a question I want to read here. It says, Richard talked about the margins. The margin requirement is 7K. Is that what you call the maintenance margin or the initial margin?
Yeah, so actually it's not quite. So when I mentioned the 7K margin requirement, really what I mean by that is, let's say you wanted to buy the S&P E-minis and hold one contract overnight. So you thought the market was going to go higher. You had an account. You would have to have about $6,000 in the account for that to happen. In other words, if you had $1,000, you wouldn't be able to buy the contract. But if you had 6,000, you would. You'd be able to buy one. The reason why it's 7,000 though is because we add the 10-year note to it. We could be long both the S&P and the 10-year. It's really kind of a weird thing, but the 10-year really only requires about 1,000 to hold one contract overnight. I'm not sure why that's so much lower than the S&P, but so basically when you put those together though, it means that to hold one contract of each overnight, you need a total of $7,000. So in our algorithms, when I talk about the 10,000, you know, a 40K account trading 4 units, really all that was needed to do that would be 4 times 7,000, 28,000. So I technically could have had a 28K account doing the same thing, and it would have also gone up by that same dollar amount because it's trading the same number of units. The reason why we don't, though, is because it's just not realistic. I mean, if you have one losing trade, you'd have to bump it down to 3. And if you had another, couple losing trades, you might have to bump it down again. So that's why we increase that. And so on the website, you'll see we do 1 unit per 20,000 actually. So what that means is you really only need about 7,000. And I know this is confusing. Every time we talk about it, it always takes a little while for it to register. But just think of it this way: it's as if it's a stock that costs 7,000 to buy. It's the same kind of principle. The difference, though, is that in futures there is a difference, and so it's more margin that you put forward. You don't actually own the stock. It's more of a contract that, and so whether it goes up or down, that cuts into that margin requirement. So then the maintenance fee that Brent was talking about, and by the way, there's a typo on the screen. It says valid until 2/28. We really are keeping that open for a week. This is a typo from the other webinar that we did. But yeah, so the maintenance fee, though, that we talk about, that's different than maintenance margin. The maintenance fee is just the flat 5% profit that we do in order to keep the company running, in essence, so that we don't have to keep selling contracts in order to have the company run. Now, the good thing about the webinar, though, again, as Brent pointed out, is that we're waiving that. So there would be no fee. It's just the one-time $39.50 and no maintenance fee. So really what we're banking on is, yeah.
Okay. I'm sorry, you kind of hesitated and went out on us for a minute, so hopefully you're back.
Oh, sorry.
Okay.
Yeah, so
right.
Sorry about that, guys. Yeah, but that's, I think, enough. Hopefully that makes sense. If there's more questions about that, just call us, email us. I'd be happy to talk to you more about it.
Yeah, one of the quick question we had is how many people actually trade on the algorithm?
Great question. So there are currently approximately, I'd have to say around 250. The reason why I don't know the exact number is there's some from the original algorithms that traded on TradeStation, and I'm not sure if all of them are still trading. I know some of them are, because some of them I'm actually in touch with still, but that number is about 250. The total number of contracts being traded is around 800 contracts. So if you do the math, and that's through, again, that's also an estimate. That's taking one of the auto execution brokers and then estimates from the other one, but about 800 contracts, which the next logical question is probably like, is there a limit? That's another kind of long question that maybe you might be wondering about. I mean, in essence, there is a limit, and we will cap these algorithms once we hit it, but that limit's pretty far away because there's things that we can do to kind of move the buys around. Because we buy at a market price, we sell at a limit. And so really we start seeing slippage on the buy. Again, this might be more complicated than what some people, you might not really know what I'm talking about. So if you have questions on that, again, just reach out to us. But hopefully that helps.
Yeah, that does. And one of the questions that someone asked was, why pay a fee up front when there are other algos out there, or actually he called robots that don't require a fee up front? And I'll speak to that a little bit. I was a trader, still am a trader, but I was a trader, doing it on my own for several years. And I can't tell you the number of robots that I used. Some of them I paid for, some of them I didn't. And that's why I ultimately found algorithmic trading, because they really didn't work. And we have clients that are clients today because they've done the same thing. They've gone through cheap robos or free robots or things that just don't work. And finally you're looking for something that actually has a return to it. And so, we're able to show you our statements and help you understand that we trade them ourselves. And so really you're kind of getting what you pay for. And so like I said, I can't tell you the number of robots that I've used in the past. They may work for a week, maybe 2 weeks, but as soon as the market conditions change, the results plummet, you lose money. And that's just been my experience with it. And that's kind of why. And Richard, you may be able to speak to that a little more.
Yeah, no, I think you covered it real well, Brent. I mean, the bottom line is you totally could, and we're not going to twist anyone's arm into using our algorithms. We do price them the way we do, though, really because we think they're just absolutely worth it. I mean, to Brent's point, the I'll just say a few things. I mean, I don't want to talk bad about anyone else's algorithms. There's great algorithms out there, I'm sure, that do like a monthly rate. If it's a really good algorithm though, and it's just a flat monthly rate that's not contingent on the number of contracts traded, I would be very, very skeptical of that algorithm. Because what happens is, if it's a good algorithm like ours, you have actual large amounts of money that want to trade it, like actual either family office types or funds, and those are the people that are actually trading these, or at least are looking closely at us. And what happens is, if it's offered at $100 a month, no matter what, a guy like that could trade it. If it's a really good algorithm, they will, and they could gobble up all the liquidity. So we have to number one, limit the number of contracts people can trade, and basically do it based on the pricing. Yeah, so that's the reason why. I mean, I think they're high quality algorithms. We're going to show, we are extremely transparent. I mean, pretty much anything you want to see, we will be willing to show you. So if you call us and say, well, I want to see customer statements, I would say, fine, I can show you an Excel that the broker sends that has some of that data, and some of the, and we've gone over that with some people. We always have to be a little more careful with that, because we don't want to oversell it. Like, I don't want to, hopefully no one hears this is risk-free, you're going to make money no matter what. That's not, there's no such thing, number one. But if you're looking for something that, hey, I can put money in, I don't have to worry about it, I can let it run for a year, see what happens, then this is, I think, the program for you. Because I think more than likely what will happen is you'll look back a year and say, wow, this actually is a great algorithm. You'll tell your friends about it, and you'll show them your statements, and they won't believe you. And but yeah, so that's why though.
That's good. Yeah. One other question. I know we're getting close to time here, but one other question was, can you set up an IRA to trade with this? And Greg, yes, the answer to that is yes. You can trade an IRA. I trade a Roth IRA in this plus cash. You actually can't trade a 401k because that's a company-owned product through the company if you're employed there. But you can trade an IRA. And so you're able to do that and have the tax benefits that come with that as well. So that's the short answer to that. And I'm going to go ahead and close up here. And if I know there's two other questions there, and I'll try to get to that real quick. But before people start getting off, we want to show you how to get started with us. It is very simple. If you want to get started, you would just simply email me right there, Brent at Algorithmic Trading, and just tell me you want to get started with the webinar deal that we talked about. This is the $39.50 for the license to trade up to $60,000 and zero maintenance fee on that. And again, we appreciate you coming back to take a second look at us. I mean, I think you'll be glad that you did when you move forward with us. So you just send me an email, just say, I want to get started on that. And then the process is very simple. So once you want to get started, I would email you over our agreement document, our user agreement document for algorithms. That comes via DocuSign, and then you send that back to us electronically. And then once you do that, we send pay instructions to us as well. So once you have your payment to us, when you use one of our brokers, typically most people use the Fox group that I'll talk to you about if you want to get started. I contact the Fox group the same day that you send the payment. We get a jump start on getting your account set up, and they immediately that day get working with you to get your account set up. Usually takes 7 to 10 days, depending on if you're, what all you're putting in there. But once that happens, once your account is approved and funded, then the next live trade that the algorithm sends out will start trading live in your account. So if you're using Fox Group, they send out a statement to you at the end of business every day. They email it to your email address. And they also have the Gain iBroker app that you can put on a smart device. And you can actually see the trades live there as well. So it's very easy the way you do it. You just simply email me at Brent at AlgorithmicTrading.net. And then I'll send you the necessary forms from us via DocuSign to do that. And if you do have a few more questions though, and you want to have a quick phone conversation or just trade some emails back and forth, we can do that as well. If you want to end up talking to Richard a little bit more in detail about a few things, we can do that as well. So I know that we promised about 30 minutes. We're at 31 minutes, and there's a couple other questions I'll hit on chat here. Richard, you got anything you want to say, or anybody else got a quick question?
Yeah, the only thing I'll add real quick is yeah, as far as the brokers go, Fox is the most popular that we have, but we also support Interactive Brokers and even TradeStation. And there's a chance that if there's another broker out there that you'd like to use, we still might be able to support them as well. But we really, we offer all of them. They're all great, and we usually recommend people to reach out to each one to figure out which is best for you. They have their different commission rates, but the most popular that we've used is Fox. But they're all great, and they're all ones that you could choose from, so that we don't really have a preference on any of them. Other than that, though, yeah. Any chat questions, Brent, or should we just end it?
One quick question: someone's asking to see a real-time trading account, and that's what we just showed you. So that was a live account.
Yeah.
Maybe.
Yeah.
But.
Yeah, and that person, if you want, so whoever that person is, why don't you email Brent so that we know who you are, and we'll set up a time where I can show you the actual statement. So what I'll do is I'll just pull them up right out of my email so that you can see, and then I'll just show you them so that you can see. We used to offer the statements online. On our website, we used to actually have a place where you could download each statement from this account. So some people that have been following us for a year, you guys know what I'm talking about. It's the same thing. The reason why we don't have that anymore is not because the algorithms didn't do well, which I think some people might imply that. The reason why is because Gain Capital actually asked us to take them down, which I'm glad that this came up because it allows me to just talk real quickly about this. But Gain Capital asked us to take them down because Gain was concerned that it looked like they were saying that, kind of validating the results. And what I want to be clear on is that those are real statements. Those are from my account. They're not doctored or anything like that. I mean, I'd get in massive trouble if that was the case. But I'm not a CTA, and so it's not audited by the government. And so that's really the reason why. But we still offer that. If someone wants to see them, I'll show them on my screen. We don't hide from any of that data. I mean, it's actually really positive in our favor. But part of it is I'm an engineer. I'm not a sales guy, and so that's why a lot of times you'll see a lot more data-centric stuff as opposed to some fancy, sales pitch. Yeah. So back to you, Brent.
One other quick question: people are still, if you're still listening, you still want to hear questions answered. That's fine. We'll stay on as long as you want to hear or ask questions. Did have the question asked about will it work in the Indian stock market?
I get that a lot. So generally speaking, the algorithms are written for the U.S. markets because what they do is they trade the S&P E-mini and the 10-year, and those have a inverse correlation of about -30%, and so they're not 100% negatively correlated. So it's kind of a pseudo arbitrage that we do. Now, if we were to trade instead of the S&P E-mini some other exchange, whether it be one in Europe or Asia, then those relationships might still hold, but really the reason why we don't is there just hasn't been a need. The S&P is the largest, I believe it's still the largest heavily traded commodity out there is the S&P E-mini. I think second is 10-year note, which is why we trade those two, by the way, because we want to trade something that can handle an 800 contract kind of market order or even higher. So that's why. But the answer is, generally speaking, these algorithms would probably do well on any exchange. They would have to be optimized again for that, though. So they'd have to be re-optimized. And bottom line, there just hasn't been a need yet. So.
Okay, well, that is the last question that I see here. Feel free to type in a quick one if you want to. We'll stay and answer a few more questions here. But just want to reiterate again to you, thanks for taking the time to come back and take a second look at us. I think with what you've seen today, you can build a good case for yourself that this is a good opportunity for you to finally do some trading, 100% automated, and finally be profitable at it. So want to recap that again for you. Instead of $5,500 license fee, it's $39.50 for that. And instead of a 5% maintenance fee, there's 0 maintenance fee. So, that right there is going to save you quite a bit of capital over the years with no maintenance fee at all. So thanks again for coming, and we appreciate your time. Richard, you see my email address here again. So if you really know you want to get started, send me an email. We'll start. If you need another phone call or trade some emails with me or Richard, send that over as well. or if you want to have a conversation with Richard again about a few certain things, just send that an email to me. And we're going to follow up this with an email to you with our offer again in writing so you can see it, and don't forget about it. We'll send it there. And so any other questions you can send to me in the via email. Be happy to answer those and get you connected to Richard if we need to do that as well. All right, thanks everybody. We appreciate it. And Richard, are we done?
I think so. Yeah. Thanks again. Thank you, Brent. Thanks a ton for everyone that decided to join. And I'll just end on another disclaimer. You know, just remember, there's always risk with everything. Nothing's guaranteed. But if you're looking for, if you're a trader now and you're tired of battling your emotions, or you're some kind of investor and you're looking into robots to trade because it's something you've heard about and you want to get involved in, I challenge you to find something better than what we have. And that's an objective statement measured by the actual returns that we've seen on the swing trader, as well as walk forward analysis we've done on the different algos, the back testing. You know, these are tested in bull and bear markets. But again, it's not for everyone. We get that. But if you're a trader type, if you understand the risk and you're willing to take that shot and you want some rest from the market, then for sure, algorithmic trading is the way to do it, in my opinion. So with that, we'll sign off, and thanks again, everybody. Bye-bye.
Thanks so much. All right.